Good morning, everyone, and welcome to our Marketview Q3 2020. Today, Ben and I will be running you through some of the trends that we've seen during the last 3 months, and also just a quick note on landed property. We'll actually be looking at the data that we've seen and the trends over the last 6 months, so since the end of Q1. Here, we've called this webinar Road to Recovery. I think that Q3 has shown us that there is a bit of an uplift in what we've been seeing across the market, but generally the recovery that we've been seeing in Cambodia and in Phnom Penh still remains pretty fragile, as it does across the region. So a suggestion that we had this morning was that perhaps it's a long road to recovery, and I think this is something that we would agree on. Some really interesting data that we've been collecting from various sources about people's understanding and belief about when recovery might happen or when we might reach a pre-COVID level of activity. And we'll be asking you the same questions at the end of this webinar. So we've got some live polls and a Q&A session that we'll be running after we've delivered the presentation to you this morning. Next. Okay, so introducing myself, I'm James Hodge, Senior Director here at CBRE Cambodia. I look after a number of teams, but I'm involved in investment and commercial. So I'll be looking after that portion of the conversation, as well as giving you a bit of an overview of what we've seen during the last 3 months and an update on the general condition for Cambodia. And then Ben, our Associate Director and Head of Professional Services, will run you through the residential portions of the content this morning. Next. Just a quick reminder for those of you new to Zoom webinars, at the bottom of the page, you should see a Q&A button. If at any point you have any questions about the content or you want to ask us something, please drop your questions into the Q&A box. At the end of the presentation, Ben and I will try and answer to the best of our ability as much of and as many of your questions as we can. So this is the format for today's webinar. I'll be giving you a quick overview of Cambodia and the situation that we've seen to date. Ben will be sharing insights on the residential sectors, so condominium and landed property. Then back to me for the commercial side of the market, office and retail, and we'll finish off with questions and answers. Here are some of the news articles that we've been following really closely during the last 3 months. And there's been some quite interesting things going on. I think that we've seen in particular some focus from our clients on capital gains tax, and there's been quite a few questions out there from the real estate sector on this. We did a really interesting event with DFDL last week actually on capital gains tax, so if anyone has any questions on that, we'd be happy to share the deck from that presentation with you, and obviously provide you with contact details for the appropriate professionals at DFDL who were partners for that event. Okay, overall, we are still seeing quite a lot of risk out there at the moment. The governmental organizations have started to improve their forecast for Cambodia's performance in 2020. So the World Bank, for example, has now revised their forecast to -2% and ADB to -4%. We've also seen an uplift in forecasting for 2021 and the consensus, I think, is that they expect Cambodia to come out of 2021 having grown about 5%. That should largely make up for any deficit that we see this year. Clearly, it's still a difficult economic situation for many, and Cambodia is not used to a negative GDP position given its long-running growth, so it's quite an adjustment. Where that is impacting is that it's causing businesses to need to adapt quite quickly to their surroundings, which is also impacting on their performance in the real estate sector, and obviously having a knock-on impact to people's disposable income and their wealth and their feelings of financial security, which in turn impact the residential market. Really good indicator here is the gold price index. So we've seen still consistent price increases during recent months. This indicates risk globally. Cambodia has done really well at being able to keep COVID numbers low. We haven't seen any significant indicators of community transmission, and the case numbers are imported cases, most of which have recovered so far. I think at the moment, as of today, we're on about 280 cases with 5 active, so good recovery rate, around 99%. The real estate indicators that we are following and tracking are largely trending down. Particularly here, you can see the high-end condominium prices as well as office rents. Retail has actually started to stabilize. It went through quite a period of turmoil in the first 6 months of the year, as well as in 2019. So the landlords in the retail sector seem to have reached a point where it is difficult for them to do anything further on their quoting rents, at least. Something that we've been following closely and is capturing quite a lot of attention from our team here is looking at non-performing loans and also from mortgage applications. Now, Q2 2020, you will see quite a reduction in the number and value of mortgage application rates here in Cambodia. But we would caution this in that if you look over the long run trend, Q2 is often quite weak. And of course, the current situation is exacerbating this issue. We will have to see the Q3 numbers to really have a proper indication of whether this is a long run trend, but it's something to keep a close eye on. And it certainly indicates that the residential market is suffering some some demand issues. Non-performing loans have increased. It was quite encouraging actually to see that during the second quarter, the mortgage rate non-performing loans increase was slightly flatter. I say encouraging. It's still not a great position to be in. We're now close to 2% of mortgage loans non-performing, but still within a reasonable tolerance. So again, keeping a very close eye on this. I think credit cards still making up a very small proportion of Cambodia's lending. It's not a metric that means a significant amount, even though the rate on it is quite high. Really, we're looking at the steepness of these curves and how long these are going to go on for. So we'll be keeping a close eye on these over the next few quarters, and each quarter we will try our best to update you and keep you appraised of what's happening in this market because it's critical for real estate, obviously. Construction investments, so these are the rates for approved projects. We have seen more projects approved this year, up by about 500 over 2019. However, the value of those projects has dropped by almost $1 billion compared to the same period last year. One note of caution on the numbers, these are quite lumpy figures, and if you get a big project like a road or an airport, it can tell in the investment value. So it may be just that we haven't seen one of those larger projects this year when we did last year. But still encouraging to see the number of projects increasing. Of course, these are smaller and they maybe indicate that FDI flows have shrunk away a little bit, especially if investment value has dropped. Cambodia is certainly reliant on foreign direct investments as well as domestic investment. But if FDI has shrunk, often FDI contributes to those larger projects. And if we are seeing a reduction in investment value, then that indicates to us that we are seeing a slowdown in that, which is natural given the travel restrictions that we're facing globally at the moment. So this is proprietary information that comes from CBRE. We undertake a green netting task. That means that our colleagues and us, we head out onto the streets of Phnom Penh and we track down all of the construction projects that we are seeing in the city. For quarter 3, so the start of October, we've so far completed 2 districts in the city. We've completed BKK and Cham Mon. In terms of construction density, these are the 2 at the top of the apex. So it gives us a good indicator of what's happening across the market. But once we're ready to release the full results, we will be doing so to our clients. We saw 77 green net projects in those 2 districts alone. Obviously, Cham Mon covers quite a wide area, but within 2 districts, having 77 construction projects is quite substantial. The majority of those, it's quite a broad mix of different types of development, but mixed use made up the largest proportion at 26% of 77 projects, followed by condominium and apartment buildings. There are a number of unspecified construction projects ongoing. This is a result of either the information not being available from the construction or being confidential, or in some cases, the developer has started constructing a shell of a building but has not yet decided which sector they want to focus in on. Good that we haven't seen too many permanent closures from sites across the district so far. So far, our data is indicating that of the 77 projects, 4 of them have permanently ceased construction. However, we have seen about double that number of delays, which is approaching 10%. Most of the construction is active though, and we saw a good number of completions happening during the 3rd quarter. The number of green net projects is actually quite similar. We haven't seen that many new construction starts, but there were about 5 of those that came in during Q3.
Okay, thank you, James, for running through the economics behind this quarter. Really, I'm going to talk to you about the residential side of the market, starting off with the condominiums. And you know, this quarter we've seen 1 new completion, adding 828 units, like so 4% to the total condominium supply. But we did see 3 new expansions, and we'll go to talk about those in slightly more details, adding over 2,000 units. So it's still no new launches over this quarter, which could be expected anyway. But interesting to see the new expansions, which are made up of these 3 projects. So across 3 different districts, and really showing that some developers that are confident in their initial phases or other towers doing pretty well in carrying on the developments across their projects, really. I think when you're looking at the average quoting sales prices, there's been a mild correction really across the 3. But if you're looking at the mid-range sector over the past 3 years, it's almost been negatively adjusted by $500, and that is fairly substantial. Although in the high end, it looked like over Q2 we saw the bigger correction, and moving into Q3, and just a lower down of 1% adjustment on those quoting sales prices. The affordable sector seems to be stabilizing a lot more around the $1,500 per square meter mark, and I don't think we're expecting too much change really moving into Q4 on that either. Looking at the rental levels, this graph on the right is predominantly central Phnom Penh districts. Is where most of these rentals are at the moment. But again, a slight downwards adjustment on the rental levels across the high end and mid range, bringing them down to $12.80 and about $10.90 a square meter. So mild corrections all around, and I think really that's just to do with the levels of activity going on in the market, as well as the new supply across these unit types. So what we have seen this quarter especially is rents coming under more pressure, but we have seen the landlords that are adapting to these changes and are now offering more facilities and amenities, especially in the sales, so throwing in things like washing machines or fridge freezers. And landlords, especially on the rental side, have been changing the requirements. So we're even having reports of landlords now accepting pets in the building to attract tenants, which is pretty indicative that the market is getting more competitive, and landlords are having to offer more in order to encourage and entice buyers and renters in the sector. So one thing that we are doing this quarter as part of our road to recovery is suggesting some short-term and long-term solutions to each sector. So when we're looking at the condominium market, I think really at the moment needs to be a focus on local buyers. And when we're looking at the local buyer pool for condominiums, pricing and payment terms is really crucial in order to attract those buyers and get those terms right. As well as the pricing strategies. So when you're looking at your sales velocity as a developer, you need to make sure that those incremental increases as you sell off parts of your project are done at the right price level, and that you're still able to achieve those sales from the buyers in the market. What we are going to see is, I think, more innovation. We're already starting to see some in unit types, unit mix, and offering. We've got some interesting things happening across the region, and questions coming up from, especially brought on by the COVID pandemic in regards to layouts and how a building should function. But I think as we are moving more into a more mature, competitive market in the condominium sector, we're going to have to see some more innovation in those products being offered. And I think really this condominium sector is quite reliant, or has been fairly reliant, on international buyers. And the question is, even though there are still international buyers in the market, when will a lot of them return? And I think that may be predominantly due to the travel restrictions at the moment. So not being able to go and see these condominiums is very difficult for an international buyer, and travel restrictions in general is somewhat suppressing businesses globally and regionally. So the international buyers will return eventually in the levels that they did before, it's just some time before we see that. And I think really all these things, pricing strategy, innovation, are going to help to attract those international buyers whenever the travel restrictions are lifted somewhat. Looking at the landed property or BOREY developments, we've seen a phenomenal number of project launches in the last 6 months. 18 projects over 5 districts. It's quite a large number, and it's approximately contributing to about 7,500 units, which is also a very large number, although we've seen 4 completions and an increase in prices in 4 of the subsectors. So really the landed property market it's been doing fairly well over the last 6 months. We looked at this over 6 months as we do this biannually, our updates on these things, but it's, you know, strong local market that has been doing fairly well. So when we're looking at the existing supply, you can see the Sensoc is still, by the number of projects, the most popular. And even on the pie charts on the right, the new launch units. So this is by units. You can see Sensoc is still making up quite a large proportion, with Pusanche, you know, really bringing in quite a large number of units slightly further out. So not too much change, but we are seeing these landed property developments moving further to the fringes of the city, and this is expected as the land values are going up in the central districts, and we're starting to see a lack of large plots available at the right pricing to do these sorts of schemes. So the future project supply by district, you can see the new launches there and the future projects. So moving away from some of the previously more popular districts, as we was explaining just before, and moving slightly further out. So 4 projects reached completion this quarter, over the last 6 months. And what's quite interesting is the 4 new developers. So this market is getting broader, with the people offering units and landed properties, and that's causing, you know, some differentiation within the projects, products being offered. So you can see, based on the pricing, that these the pricing gaps have increased from the lower end to the higher end more over this last 6 months. But really on the attached units, we're seeing the price increases compared to Q1 2020 are all positive. And I think on average on the attached units, it calculates at just over 5%, with the Link House increasing 12.5% on the average asking price. You know, it's quite a substantial amount. And I think when we are looking at this with our research team, I think the local Cambodian market is still viewing these landed properties as a substantial investment option to buy land and achieve a freehold. And that's why the pricing is increased on these sorts of properties. But when we're looking at the detached units, which include the single villas, queen villas, prince villas, you can see that the prices actually, or the average prices, come down slightly. But we are seeing again, especially in the king villa segment of the market, that price gap between the lowest asking price and the highest is quite substantial. And this is mainly due to the new developers coming in and the different sorts of unit mixes and unit types that are being offered throughout that segment. So really quite powerful numbers from the landed property sector. These are some of the projects which have completed. So most of these names are very familiar, and most of these projects will be quite familiar with most of you that are based in Cambodia. So you can see that there is, some differentiation, or more differentiation, between at least the design of these landed properties. However, it has been more difficult for developers to achieve, or it seems more difficult for developers to achieve the pricing that they're increasing at. So they're having COVID-related promotions, better pricing plans, new designs, and more features. So all of these things are really indicating that in order to achieve that plus 5% on their sales prices, they're having to offer more, and there are more projects. So really that increasing competition and increasing prices, pushing these developers to do more and to put out more. It's quite interesting to see that the COVID-related promotions are directly related I think really they're playing on the, everyone knows of the reduction in pricing due to COVID. Prices are coming down, or demand is coming down really across. So relating promotions to COVID is quite an interesting marketing strategy, really. So looking at the road to recovery, I think we're going to see more daring promotions. So, you know, we've even had indications that developers are now offering elevators as part of a package. I think, you know, in the future we may see cars being thrown into these landed properties in order to help get the sales. So more promotions in the short term for sure. I think most of these landed property developments are only constructed once they are reach a suitable level of pre-sale. So the speeding up of construction activity to meet the handover requirements is really to help the developers' cash flow. So I think we're going to see a lot of that in the short term, speeding up. And I think going forwards and more midterm to long term, we're going to need to see a focus on affordability. I think really in the lower end of the market, with the increase in price each year, is making it quite a key focal point in the landed property sector. And I think, you know, when we're looking, especially in the central 5 districts, we may have to start seeing low to mid-rise developments. So we're talking 6 to 8 story within those landed property schemes in order to make the returns from on those land values, which are increasing quite high. So as affordability comes into question more, and you know, the buyer's purchasing power, you may have to increase the density on those projects going forward. I think I'm going to hand back to James to talk about some of the commercial things, looking at office and retail, and then we'll open the floor to questions. So if you have any, please send them in at the bottom.
Thank you, Ben. So I'm here back to talk to you about office and retail. Okay, so over the last quarter, we didn't see any new centrally owned offices launched, but we did see 2 strata-title projects enter the market for the first time. We saw 3 completions, 2 grade B buildings and 1 grade C. They make up just over 30,000 square meters of new supply. And in the supply pipeline, 50,000 square meters of stock that we were expecting to be delivered this year has actually moved now into 2021. The supply chain disruption that we saw in the construction sector earlier in the year has caused many of those projects to just dip over into the next 12 months. Okay. We've been keeping a really close eye on Google mobility trackers and trying to understand where the long-term trend is in this sector. I think we've now seen quite a long run of -20, -18% adjustments in workplace. Obviously, it varies depending on the day, but broadly, this seems to be where the market has stabilized at following the COVID-19 pandemic, and it will likely take some time for businesses to recover those workforces. Q3 has started off with some of that recovery, and hopefully we will see more hiring continuing into Q4, but likely not significant numbers to start to tell on this until early next year. What we have seen, therefore, is a reduction in the workforce in Cambodia, or that we are still seeing a proportion of that working from home. I don't think that that volume is particularly large. So from a landlord's perspective, the pool of workers out there in the market is now reduced. Just bear in mind that this also would take into account people working in hotels or the leisure industry that has been affected more so than some of the businesses which occupy offices in the city centre. So some impact on the workforce and therefore the amount of office space needed. We will be, again, trying to keep a close eye on this. I think it's an important indicator for us for the longer term to try and understand how things are moving and reacting, and what does this mean for our clients and the market as a whole. In terms of supply, by the end of the year, for centrally owned offices, so these are offices owned by one company and leased to multiple companies, we will be just shy of 450,000 square meters of stock. Key changes over the quarter, we saw nearly 9% reduction in occupancy. That was largely driven by increases in new supply being added into the market. We've seen nearly 60,000 square meters of supply added over the course of 2020. Obviously, more than half of that over the last 3 months. And we're still expecting nearly 20,000 square meters by the end of the year. So we went from a peak of occupancy around 90% at the end of last year, and we'll be back to a level of around 70% in this market by the end of this year, if our forecasts hold true. That is quite a substantial change over the course of 12 months. We are still seeing some of the movement of the supply into next year. That will help the occupancy rate a little bit. 2021 was looking relatively scarce from a completions perspective. So we do have a little bit of time to try and make up some ground before the next wave of completions comes towards 2022. These were the completions that we witnessed during the last quarter. So TK Central and The Point being Grade B, and Scion Building in Phnom Penh, Grade C option. Quite diverse in how they're formatted and the targeting of each, and occupancy rates varying across these buildings. What we have seen is a continuation of the trend that we witnessed last quarter, predominantly Grade B buildings coming under pressure. A lot of the 60,000 square meters of new supply has been in the Grade B market. So we saw an almost 10% rental reduction quarter on quarter in non-CBD Grade B offices. That's quite substantial, and it pushes Grade B non-CBD down to almost Grade C CBD rental. Whether or not the two will cross, they could well do for a short period of time. But what we're seeing really is an alignment of Grade B towards the Grade C rent to make that economic argument to occupiers to move to Grade B. At the moment, pricing is, rental rates are king as far as the occupiers are concerned. They really are very focused on cost, and cost not only of rental rates for the longer term decision making, but also cost of fit out. So they are having a keen eye on handover condition and on the terms and incentives which are available from a landlord. STRATA-TITLE supply, we saw 2 newly announced projects. By the end of the year, the market will be at somewhere in the order of 120,000 square meters. We have seen 28,000 square meters of supply that was meant to be delivered this year move now into 2021. And I expect that some of the 2021 supply, because it's very substantial, will actually move later into 2022. We are awaiting some pretty big completions, including GIA Tower on Diamond Island, which is a very substantial building, and beyond that, Morgan Tower. And we're obviously also anticipating the completion of the Gateway, which is also a substantial STRATA-TITLE project. So these were the two new STRATA-TITLE launches. We've seen Benrich Tower launched in Phnom Penh, that's near Wat Phnom, and we've also seen Odom Tower in Cham Kar Mon, just down from the CBRE office, on Norodom Boulevard. So quite different targeting from these developers, and the information that we see so far, Odom Tower looking very much to capitalize upon the trends in the local market, particularly from local businesses who are interested in not paying rent, but investing in their office space for the longer term and buying something. That fits quite nicely into some of the trends that we're seeing from local businesses, whereas Benrich Tower appears more as a typical STRATA-TITLE office operation, largely focused on international investors. Year to date, this is map of completed office projects. So we've seen 9 making up that 60,000 square meters of space, and it's a real mix. The grade C actually are generally smaller buildings, whereas a grade B are larger, and one STRATA-TITLE project, which was Legacy up Choi Chang Far. So office roadmap to recovery. This is key. I think our clients are very keen to understand when is the market going to come back. In some instances, the market will still remain slightly subdued until we see international travel becoming considerably easier. A lot of corporates require decision-making from regional teams in order to invest in office space. In some cases, they are designating the responsibility for that to local teams or to an agency who would be able to understand and make that kind of assessment for them and help them with the due diligence work that they must undertake in order to sign off on a transaction. But until we see international travel opening, the market's likely to remain pretty subdued. In terms of what we've seen short term, there is clear review of lease agreements. That is both existing agreements and people trying to renegotiate mid-term. We are seeing a lot more lease renewal work, and those lease renewal negotiations are obviously much tougher, and the landlords are generally prepared to be more pragmatic than they would have been pre-COVID, as well as new leases. Very much a focus on the detail, the depth of the transaction, and making sure that they are getting value out of that transaction. Diversification in the office supply, we're already seeing it. So now in the grade B market, you can look at having a very corporate grade B office, or you can have one that's very design orientated. You can have one that's slightly cheaper. You can have one that's slightly more expensive. So real scale now in many of the sectors that we're looking at. So tenants have got more choice. That can be confusing for them. They need guidance for that from a landlord and from their agent, but they do have quite a bit of information to wade through. So making it nice and easy for them is really critical from a landlord's perspective. You have to make that choice quite clear. There is a lot of caution around expansion. Tenants have started to reduce their space requirements. They have been now for the last 6 to 9 months. The average deal size in the market has shrunk quite considerably. So in 2019, average deal size was somewhere in the order of 270 square meters. This year, I expect that number will end 2020 somewhere in the order of 170. So average deal size, we lost 100 square meters. That's quite a bit of ground to make up for the average landlord to fill their building. It takes a lot more 170 square meter deals than it does 270. And this also impacts tenants and their workplace strategy. If they're having to invest in fit out for an office, as well as sign a lease, which might be 3 years in length, their business will change considerably during that time, and they really will start to think about workplace strategy and flexibility. Whether they have done that at this stage, many have, some have not yet. So a lot of review and thinking to be done on how to build in flexibility, a long-term value for and from their office space. In the retail sector, we have seen more stability. We've actually seen 4 new brand entrants entering the market over the last 3 months. We saw 3 food and beverage operators and 1 health and beauty store. We saw 2 new projects completed. They're both community malls, and they added almost 22,000 square meters of space into the market. However, we saw 40,000 square meters of supply delayed into 2021. Google Mobility has some privacy issues on retail and recreation, so they've stopped tracking this metric quite so accurately. But we have seen a relatively steady recovery, and now a little bit of a flatlining in terms of retail in Cambodia. So on average now we're around minus 11% from the pre-COVID baseline number. But during the holiday period, when we saw a significant reduction in when people were going to work, they were actually going to the mall. So we saw a plus 11% trend on the pre-COVID baseline during Q3 around those holiday periods, which must have been a good boost for the retailers. Current supply, by the end of the year, retail should hit just shy of 400,000 square meters of space. The majority still located in Chamkarmon and Sensok, with Phnom Penh coming in third in terms of location. These were the completions that we witnessed over the third quarter. So 313 Quayside, which is a Hong Kong land development, and the One Mall. Encouraging still to see these opening with different formats and targeting. One very much looking at the future of tourism and trying to create a slightly different theme for the riverside, and the other very much there competing with the likes of the Bridge and Aeon in that in quite a busy retailing district, but offering something slightly different from a formatting and design perspective. Quoting rents in retail, we actually saw quite a bit of stability over the last quarter. There wasn't any change in shopping malls, podiums, or the high street. However, community malls, we did see a slight reduction, almost 0.5%. This comes after several quarters of quite substantial pressure on the retail sector and quoting rents. I don't think that these necessarily reflecting still the underlying trend, but it does indicate that landlords have now reached a point where it's very difficult for them to adjust their quoting rents any lower. But incentives are still out there from many landlords, and we've run a really interesting project recently called a Retail Flash Survey, which is an initiative that our regional team uses regularly. And we'll be talking about that a lot more over the coming month with the insights that has brought us on the minds of the retailers and what their future thinking is. But certainly does indicate that bricks and mortar landlords have got some work to do to convince some of the retailers to continue investing at the same rate they were pre-COVID. Vacancy rate ticked up slightly by almost 1% quarter on quarter. That was against a supply increase of 6%. So the retail market has done pretty well, being able to absorb that additional 20,000 square meters of space that was added into the sector. Those landlords and many of the landlords that we're talking to in the retail market pretty cautious about opening at the moment until they've hit the right occupancy level, which is why we've seen some delay of completions happening in this sector. And really critical for retail market at the moment are continuing on with risk management strategies. Clearly, publicity around COVID and infection from a retail perspective, especially in the F&B market, would be very difficult for a retailer to handle. And so they've invested in technologies and approaches, structures to try and mitigate some of that. And we have seen a lot more activity from the retail developers and landlords in trying to promote their centres. So a lot more collaboration with retailers on promotions, on different opportunities and ways to bring footfall to the mall. Some quite creative stuff, all pretty different. Lots of initiatives there, from gift vouchers and discounts to free parking. All of it in an attempt just to boost that footfall and really try and collaborate with retailers. Retail is very much a collaborative industry, and they have to work together very closely in order to be successful. So it's good to see that this is happening, and I'm sure that it's a trend that we will see moving forward. Another trend that we've witnessed, this is just down the road from our office. We see a lot of Food Panda delivery drivers here outside the Koi. I think this is indicative of what we've been seeing across Phnom Penh. Certainly when I venture out of the office, we come across a lot more delivery drivers, and I notice them also inside the mall. At the moment, retail in Cambodia not particularly well set up to handle this kind of system. You can see the congestion caused by the delivery requirement and demand for the Koi. However, retailers indicating to us that at the current time they're not willing to invest in initiatives like cloud kitchens, or what we call dark kitchens, which would allow efficiency drives in this sector. So what's new in retail? Well, here are the 4 brands that we saw, mostly still in food and beverage. Over the course of the year so far, we've seen 34 new expansions, and we've seen 18 new entrants. That is well down on what we would expect, but not out of the realms of what we were reforecasting in March. So 7 exits. Actually, none of those have been in the food and beverage sector. Food and beverage still forming by far the mainstay of both expansions and new entrants into the market. Retail has a slightly more complex path to recovery, we think, so there's a lot more here involved, what needs to happen in order to reach back to pre-COVID levels, and it will take some time for this to work through the system. But it's already encouraging to see that landlords and tenants are working together on their marketing strategies. Both of them have work to do on each side of the relationship, but when they come together, which they have been doing in many instances, especially where a landlord is in some cases tied to the tenant's success through turnover share rent, we are seeing quite a lot of collaboration, which is encouraging and should bear fruit. Still in this sector, there is a lot of review and examination of leasing terms, particularly for new entrances. They want to make sure they're making the right decision. And we are seeing some cautious expansion of omni-channel. That is led by things like Facebook and the convenience of the apps, the food delivery apps that we've been seeing the expansion of here. And certainly contributing towards digitalization, as well as the structuring for landlords and future retail projects. And that really all leads us to proactive asset management from the landlord's perspective. So really making sure that they've got their tenant mix right, that they've understood how their mall can operate best for retailers, that they've thought about the marketing strategy over the longer term and implemented something, and that they really have got their positioning correct to tie all of that together. So that is the end now of our presentation. We will shortly launch the live polling. So if you are all able to, you should see the polls pop up on your screen. And if you are able to vote for those, we would be grateful. If you can't find it, there is a poll section at the bottom of the page. Just click on that and you should be able to share your views with us of what you think is happening out there in the market. So in particular, we are asking you, have you seen any improvement or deterioration in the business environment during Q3? From our polling that we've done recently, it seems to be a split between a slight improvement and a slight deterioration. So it'd be really interesting to see what all of you come out at. The second question we'll be asking you is, how long do you estimate it will take for business activity to return to pre-COVID levels? Well, again, super interesting to understand. I think a lot of people have got some quite good feeling, I think, for this question, and everyone's got an opinion. I wonder whether your trend will follow what we've seen from other surveys that we've undertaken recently. And the last one is, where are you putting your money at the moment? So are you investing in real estate? Are you buying gold? Are you just holding it in the bank? Where is the safe haven at the moment? Where are you finding the best return? Our internal discussions that we had, we were questioning whether landed property has become the new gold for Cambodians. Is it safe? Obviously it's not, but whether or not it was gathering that kind of reputation. So given the price increases we'd seen, it was quite an interesting discussion from our research team and with our partners and our clients. So I think we've had a lot of you vote already. The indications are that we've seen a slight improvement in the business environment during Q3. Yeah, I think we would agree. There has been a bit of brightness out there. In terms of when will business come back to pre-COVID levels? Well, you're all a lot more optimistic than some of our other clients, and you're saying within 6 months. That's good. I hope so. Most of our indicators say to us that we're expecting between 12 and 18 months. And in some cases, there is a bit more optimism, and we might be looking at 6 to 12 months. So broadly, that's well aligned. And I think all of you putting your money in the bank pretty much, which is quite interesting. Everyone else quite split, but banks appearing as the favorite there. So everyone trying to hoard cash, which is probably an interesting strategy, waiting for opportunities further down the track. I don't know whether you feel that pricing might come under further pressure in condominium, landed property or land. So time will tell. But the returns from banks still pretty good here in Cambodia, way out competing inflation. So it's also understandable as a safe haven, you're mitigating against risk. So we've had 11 questions for us so far. And if anyone else does want to ask anything, then please do. What I will do is we'll run through these now. Okay, so why are projects delayed or permanently closed? So this harks back to the green net, and just to reiterate on the green netting project. Green nets refer to projects which are under construction. So if you look at a project which is being built across Phnom Penh, they're usually wrapped up in a green net. So it's very literal. We just go out and we assess the project. When we're looking at why projects are delayed or they're permanently closed, some of those reasonings are not clear, to be honest, but in the majority, it's because the landlord is either waiting for the market to recover, they have a financial issue, or they have a supply chain problem which has pushed their cash flow too far, and they're really struggling now to pull it back and get the project back on track. There certainly has been a slowdown in construction activity from some areas, as it's still challenging to get some technical equipment into Cambodia. So I will hand over to Ben, and Ben will.
Yeah, we've got some questions about dark kitchens. I think James really spoke about cloud kitchens a bit and dark kitchens. So really this concept is about moving your F&B facilities for delivery channels. So instead of locating necessarily in the center of town, you may locate yourself outside slightly, which makes it easier for delivery drivers to find where you are. And you can also get some economies of scales there. So we've seen this happen across Europe with some of the delivery companies setting up these sorts of facilities. It also has some benefits, or some arguments of some benefits in terms of rent, because you can pay a lower rent. You don't need that dine-in experience if most of your business is deliveries. So we don't really see that here yet. And I think the discussion that we were having internally with our research team is that a lot of these retailers quite like having that prominence on those high streets and in those shopping malls. So that's working quite well for them anyway. So that, really the concept of cloud kitchen, perhaps it's a little bit too early for Cambodia, but we'll see. Obviously the infrastructure in terms of delivery is also not really set up. So I think there's still somewhere to go with that whole area of the industry. Okay, just to touch on some of those poll results that are still being updated, I think really when we ask where are you putting your money, we also were talking, there's so many different options that people, the clients are discussing with us. It may not just be land or landed property, it could be condominiums or strata-title office. I think it'd be really interesting just to get anyone's thoughts on that as well. And I think, that in terms of recovery, we're pretty even now between within 6 months and 12 to 18 months and 6 to 12 months. So, I think James started off this presentation as, the road to recovery. Perhaps it's the long road to recovery. I think at least the audience here today is quite split on how long that road will be. But if you haven't voted, carry on voting. It's really interesting to see your answers there. I'll hand back to James to take another question.
So someone asked us to describe the difference between grade A, B, and C offices. This is a common question that we get, and actually we have some guidance. If you take a quick look on the CBRE website, we have an office leasing guide, and it is described in there. But briefly, we're looking at the size of the building, the specification, including things like lifts, and the handover conditions. So for grade A, we'd be probably looking at centralized air conditioning, raised floors, and suspended ceilings, whereas grade B would be slightly less. From that, probably a split air conditioning system, less lift capacity, probably slightly less car parking. And grade C, again, lower, very basic handover condition. Further one, residential. How are we seeing progress for 7 satellite cities? Well, satellite cities here in Phnom Penh take on different guises. What I mean by that is that some of them are developed by multiple partners and others are controlled by a central group. So there are quite a lot of variation in progress that we've been seeing in this.
Okay, I'll try and answer a couple questions. Some of them are very particular at the moment. So do we have an update on the Phnom Penh International Airport project? Not really. It's going ahead. It's moving, from what I understand, quite quickly, and that's an airport, for those that aren't aware, for it, located towards the south of the city, which should help boost the values around there and make it a bit more interesting. I think we have seen more landed property projects move out towards that way, and there have been an interest in developers moving over there. And another question about any updates on Sihanoukville. I think this is our Phnom Penh market update, but we did just recently put out a report on Sihanoukville and what we think about the future. And you can find that on our website under the research tabs at the top. So we're keeping a close eye on that, and I think hopefully we're beginning to see more activity and more people return to the city towards the end of the year. We've also got some questions about forecast for Q4 2020 and Q1 2021. So I think really we're expecting to see completions in almost every sector finish up. I think really around about now we're not going to see many more of what we presented today being delayed. I think most of the things which have been moved later into 2021 or 2022 would have been already. So we've got a pretty good idea of where we're going to end up on supply by the end of 2020. In terms of rents, I think we've had quite a lot of the correction in the office market over this quarter. I personally don't think that it will correct too much more in the final quarter, but we'll see what happens there. I think we'll have a better idea in the next couple of weeks with all the holidays coming up over the region and that sort of thing.
Okay, someone has asked us, what is omni-channel? Omni-channel refers to the instance where retailers use different forms of retailing in order to access their audience. So we would be here looking at both bricks and mortar retail. By that we mean physical stores, people going to a shop and buying, but also mixing in things like online retailing. And we are seeing quite a bit of movement now in Cambodia because of the prevalence of Facebook for social retailing. There were also a couple of questions here about cap rates. What we are seeing actually across the region and also here in Cambodia is that capital values have broadly held quite steady compared to rents. So we've been seeing yields compressing. That might seem counterintuitive in a market where risk seems to be growing because of COVID and the underlying economic issues that we've been seeing. But we had a discussion on this yesterday with some clients, and I think the consensus is that the long-term nature of real estate is quite appealing during what people are seeing as probably a short-term issue. although it has extended its timeline and its impacts quite significantly. But retail still, real estate is still seen as something to look into and invest in. So capital yields have not changed too significantly. It really depends upon the sector that you're looking at. But still, for Phnom Penh, we'd probably be looking anywhere between 8 and 6%. Depends on the asset, but that would be a typical condominium to commercial asset yield rate.
Yeah, on that, there was that the yield relationship is quite interesting. I think really conversations globally and regionally is about the bonds and interest rates being offered. So I think that's part of that story as well. And there was a great article on the Financial Times last week about the changing world of macroeconomics, and discuss that a little bit more in detail if you're interested in reading that. We've got a question here about where is the CBD located, new CBD, or is it the same? I think that, you know, that's a really interesting question. I think we've spoken about this before in the past about how do you really create a CBD, or, you know, condense it to an area. You know, we are seeing high-rises appearing in different pockets of the city, but I think really the CBD is still where it is. So up in the Phnom Penh district and around there, where you've got, you know, those buildings like Exchange Square, Batanak, and Canadian Tower. But, you know, it could be moving away from there. I think really it's all going to be dependent on when there's new grade A buildings start popping up and what quality they're at. I think there also needs to be a little bit more commercial activity in certain areas, so maybe we'll see that through some public transport or some improved infrastructure in those sorts of locations to really create that core CBD.
Okay, we've still got a lot of really great questions here, and I'd love to get through them all. I think we probably run out of time, but we'll try and pick up on a few more. Can CBRE give us some information on Sihanoukville City for real estate and a conclusion for next year? Actually, we just issued a report on Sihanoukville a couple of months ago, about a month ago actually, and there's some quite significant information in there and some projections for what we think will happen for Sihanoukville longer term. Actually, most of that extends beyond 2021. 2021 for Sihanoukville is likely to be still a bit of transition. International travel has got to resume in order that we start to see investment happening there again. But there are some interesting projects ongoing, and the infrastructure improvement has really seen a bit of a boost for the district. So overall, pretty positive on Sihanoukville for the medium to longer term. Clearly still quite a lot of issues to work through, a lot of structuring, a lot of regulatory and bureaucratic stuff to get right around urban planning and resourcing. Particularly, I think on the skill set and human resourcing side of delivering the plan for Sihanoukville, which is super ambitious, and if it works out, then could have potential to create a solid, diversified economy.
Great. I'd just like to thank everyone for coming. I think, as always, if you have any other questions that we didn't manage to get a chance to answer, you please reach out to us. And if you have any other questions or queries, our team are always happy to answer those questions. Thanks to James for running us through lots of the commercial side of things and giving us an overview of what's going on. And you know, thank you all for coming. I think it was really interesting to get your thoughts through those polls on those things. So thank you very much, and I'll just let James sign off.
Thank you, Ben, and thank you everyone for attending. Really, I think it was valuable both for us. I hope that you found the content interesting. We'll be uploading this along with our Marketview to our website, and then we'll be sending out links to you a little bit later today. So stay tuned, and we'll send you over the slide deck, and we'll actually upload this video onto YouTube in a slightly shortened version a bit later. So thank you again all for joining us. On behalf of Ben and the research team, we really appreciate your attention, and just to say thank you to our research team for the huge volume of work that they've put together in such a short space of time. So thank you all, and we look forward to speaking with you again soon.